Sandeep Tandon, founder and CIO of Quant Capital, now joining in to help us make sense of everything that we've seen. Sandeep, today is a day for the believers, isn't it? Those who over the last few months, which have been quite patchy, dug in and thought that yes, India will respond in a way that bolsters the domestic economy. What would you do if you were sitting on the sidelines today? And how do you look at all of the events of the last 72 hours or so?
See, obviously the background was perfect. We have been talking about the FI short position is significantly large. Sentiments, if you really look at because of that Trump-related tariff or noise which is there in the markets, obviously people were slightly anxious, so the overall exposure was low. So I think it was more of a confidence crisis which we have seen in last 1 month. That's the reason India underperformed both from emerging market perspective and developed market perspective. And obviously now this boost has come, a bazooka sort of thing, which announcement has come. So obviously it is very domestic centric. I think government has taken right step. Industry has been talking about rationalization of GST for a while, but nobody expected it will come with this manner. And that's the reason market have obviously rallied. So people will be forced to cover the short position and some confidence will come back, which was slightly missing. So I think it was a background which was there. That's the reason we are seeing this reaction. The challenge is what we have to see, how quick will be implemented, what happened in next 2 months time, 1.5 months time, whether people will defer the decision or particularly four-wheelers or two-wheelers or heavy item, where household item and the food item, you can't make any deferment plan. But can you defer it? So whether buying will come with a gap or some sort of lag, that what we have to see. But as of now, obviously, it's a great sentiment booster, and we hope that consumption will pick up.
Sandeep, of course, Sandeep Tandon from Quant Mutual Fund with us. And Sandeep, the question would be, would you preempt no big negatives on the global front and position your portfolio towards consumption and be largely invested, even if you had some cash, let's say, ahead of this event? Now, would you change that course?
See, if you analyze, Miraj, our portfolio, we have been largely domestic centric. We have been avoiding these global exposure except pharma, because pharma we strongly believe, America also does not have any choice but to buy from us. So if you exclude that thing, largely domestic centric thing, and obviously consumption which was slightly affected, and if this can be a booster. So I think it's a more of a confidence boosting exercise rather than saying that number will be visible on immediate basis. I think this was much needed support because capex was getting deferred. People were not willing to take any action or any steps on this. So I think some clarity will emerge, but I think it's too early and too premature to really celebrate. Let's see, look at the fine print doesn't come, but directionally is definitely very powerful.
Sandeep, in agreement with the kind of direction that the market has seen as the biggest beneficiaries, your EMS players, your consumer durables, your autos at the forefront of this?
So obviously, auto is definitely consumer durable also, but in consumer durable and in select auto also, we have to look at the concern which we have in the market for last. If you look at the last numbers, and most of the companies have talked about inventory, So you have very large, meaningful inventory in the system. So that also has to be cleansed first. Then, so that could be a very challenging phase, whether those inventory at the dealer level, whether inventory at the company level. So because the GST angle comes into picture. So I think that also has to be cleansed. So that is a very important thing. And as I was saying in the beginning, whether people will defer the decision. See, in food, you can't. Okay. But in heavy items, whether it's auto or consumer durable, also to certain extent, people can defer. So we have to be very careful. I think my personal assessment is that since government has already made this announcement, logically, they also understand the situation. So logically, they should be making this announcement much before the Diwali itself, maybe much earlier. Maybe one can quantify and define it. This is the Diwali Dhamaka which we have, or the gift which is coming. Now, we have to also understand what balancing acts come into picture because very large amount of 28%, is there, so whether that get compensated in some form or other, those maths we have to really look at. But I think the intent is right direction because volume can pick up. So I think keeping in mind whatever is happening in the industry, I think is a very very constructive step which government has taken. And let's get wait for more clarity. And but prima facie, last week also I said neither I'm too bullish now, no, not too bearish. Okay, something similar stand I'm saying, slightly constructive background was there. So one should optimize this opportunity and increase domestic sector exposure if somebody is sitting on cash.
Even there, even on that domestic exposure, would there be a tilt now towards consumption? I heard you say in your opening answer that consumption seems to be the. So if you had an X percentage of capex oriented place and X percentage of consumption, would you change that tilt a bit more now?
See, market has already showcased that the price action is already clearly visibly.
Exactly.
The gaps are very high. So which means that smart shifting has already begun, and I think it can only gather momentum. Okay, so it's a very simple thing. See, the Neeraj, one important thing which we want to highlight, if you really look at last 6-8 months move in India, all the new age companies have done better because it's not they were cheap, they were very expensive and still expensive, but they have a trigger for growth. Now other consumption we didn't now name get a visibility of growth coming back, and valuations are anyway attractive, whether it's a consumption names or two-wheeler names or any durable name. I think money will shift from these high-end new age companies towards some of these value theses where growth is more visible now as compared to which was missing earlier.
I'm wondering if this is the time to look at the broader markets and small cap players more closely, Sandeep. Of course, your financials, your IT already in focus with their CISOs, auto right now. But is this the opportunity to look at maybe smaller companies which could really scale up quickly with this kind of GST boost? Just your thoughts on that.
So logically, yes, because given the low liquidity, the impact cost is much higher. So obviously, the price appreciation in these names will be far higher than the large cap name. But one has to be very selective and has to be very choosy. One should not get carried away because something has changed. As I said, very important to assess how the current quarter, basically the September quarter would be, whether the cleansing part of the inventory will be sorted out, or whether you're going to talk about how the numbers will bottom out by September. So that's a call one has to take whether market has already factored in or something still pending. So I will not be very aggressive, but it will become a very stock specific opportunity where one has to be very calibrated in terms of looking on all these data points and then taking a decisive call rather than just getting carried away. Yeah, this has come down. Let me buy a basket.
Sandeep, the other one argument on valuations is that we still are about whatever 22 times FY26 and therefore not necessarily cheap. But we were looking at some data in the morning, and MSCI India has underperformed MSCI EM quite significantly. I think 17% over the last 1 year. Valuation premium also that our analysts calculated is the lowest since April 2021. FIs are short. The overall holding is sub 16%. Do you think that changes if the global piece doesn't worsen from here? And could that give further tailwinds, if at all?
See, Neeraj, we have to understand that if we go back in our history, right from 1991, 92, when we have seen a crisis, okay, I think Indian entrepreneur has always come back with the bang sort of thing. So I think this crisis also is very important how we navigate this thing. I think government has showcased a willpower, not surrendering to the US thing, protecting our local interests. And I think world is watching us, it's not like it might upset the market participant from a very near-term perspective, but if I look at from a government stand, from a longer-term perspective, we are giving a very clear edge that was not willing to bend. Russia was beyond their control. And if India also have taken a very strong stand, I think it's a clear message that US relevance in the global markets are declining, and Trump will act as a catalyst in doing that. NATO countries' confidence is also low. Though a lot of people surrender and beg, to work out because a lot of things are dependent on the US market. Unfortunately, with India, it's very limited. the impact will not be very meaningful. And in fact, recollect, this is what government has done. The real impact will be 0.3, 0.5% of GDP. If they can address through GST route, which they have talked about, I think things will be sorted out. So maybe there could be some industry-specific pressure, but largely industry will look for a newer opportunity, newer segment, newer region or geographies to export. And I think things will work out. I think that we have to adapt new environment rather than be dependent on somebody's mood and the swings which we are not. You can't plan your capex based on the swing of or mindset of an individual. So I think from a larger perspective, great news for India because every crisis I have seen, India has emerged, entrepreneur has re-emerged, and that's the way I define this opportunity. Maybe short-term pain. That's the reason India has underperformed market in last 1 year perspective, last 1 quarter, even last 1 month perspective. But it's a call we have to take. India has been outperforming in last 4 5 years. So 1 year of correction and consolidation also we go through it. And if it's something constructive from a longer term perspective, then I will go with this thesis that from a longer term perspective, it is making sense. And it's a game of P multiple or the perception, how the perception. And I think India is demonstrating that is a new emerging leader, new thought leader. They want to create their own legacy. They want to create their own benchmark. I think grounds are perfectly set from a longer term perspective. So one should not get capitulate or give up in the recent turmoil which is there. So I think if somebody has a longer term perspective, which we as an institution we have, I think it's a great opportunity to participate in the main market.
All right. Before we let you go, Sandeep, just a thought on whether you would look at IT more constructively now. I mean, that's the next sort of moonshot, isn't it? Once things clear up here, or do you think fundamentally this is something you'd want to stay away from? Just your thought on IT.
So, yeah, but if you really look at from a very near-term perspective, from all this GST, there's no impact. But I think they are closer to the neglected territory, which we generally try to look at. So we also have started adding some of these large cap names in our portfolio. But again, I'm going to wait and watch, as I said, maybe by September, October, September quarter. So by mid-October, I think what should be factored in this could be the last quarter and earning cycle should pick up. So if somebody wants to be slightly more adventurous, one can nimble now. But if somebody wants to wait for more clarity, one can wait for it. So we have started adding in our exposure, but our stand is still not very aggressively to go all out and build exposure. I think time has come to rebuild some exposure depending on the opportunity from company to company.
That's very interesting to hear, Sandeep. If you're adding IT and rebuilding exposure, at what end? Are you looking at mid-cap? Are you looking at AI focus as a filter? How are you looking at these picks right now?
Predominantly large cap because over ownership is there in the mid cap. People have made a lot of money in the mid cap space in the last 1.5 years. I think that's the area which is grossly overowned and they're equally expensive also. So we'll prefer large caps name where ownership has gone down significantly and they're more attractive and they're more liquid also.
Sandeep, just one final question from mine, because you mentioned that you focused on domestics, but you also mentioned that some of those domestics, particularly staples, are and continue to be expensive, and they continue to, I mean, the regional players continue to chip away at those market shares, right? I mean, I've bought a lot of stuff on my phone from very homegrown brands which appear on Instagram, etc., etc. So a lot of products which I would have traditionally bought from staple companies are now being bought by local brands. Do you buy into staples because they haven't performed as yet and there is a consumption boost, or are there other consumer plays which are better?
So I think within consumption staple, my focus is also on the food company. Two specific reasons. One, obviously, the even from let's say lot many items from 18 will not be removed, but if it belongs to food category and mass consumption category, will be moving to 5%. That's the way we understand. And second thing is very important to understand is that when it comes to see, you can experiment with some amount of other product, but when it comes to food item, I think the quality, the brands of some of these established companies, not necessarily MNC companies, even Indian-centric companies also, people prefer to go with quality names when you consume anything. And so that's the reason I'm saying food companies, specifically food companies in the staple space is our focus area, not in general.
Okay, okay. Thank you so much, Sandeep, for speaking with us today.